Good morning, everyone. This is the weekly video for the last week. I apologize that I'm supposed to release this video on Sunday. However, I was on a staycation to celebrate my mom's and my birthday, so there was a slight delay. So I do have a sincere apology for the delay, but nonetheless, let's go through because we'll be going through what will be going on for this week, and hopefully you'll be able to watch on Monday itself and be ready for the rest of this week. So as usual, we are starting off with the SGX fund flows, the Singapore fund flow. So what you can see here is that in the last week, the fund flow, we have a divergence again. You can see the institutional and the retail, they went in the opposite direction again. And on the cumulative side, it seems that we are going further downwards rather than closing the gap. We are sort of pointing towards in the downwards direction. So most likely this means that we are going to expect even more downward in the STI pricing. So from 2 weeks back when this webinar first started, I have always been pushing the idea that we should not be investing or trading into any kind of funds that are part of the STI constituent or the big cap funds such as the banks, Jardines, Singtels, around those kind, but rather focus on the mid cap and the low cap fund, mainly because you can see most of the funds are flowing out of all the big cap and the STI constituents, so they are not really conducive for trading or investing right now. And you can see from the STI index fund flow also, we can see the the fund flow start to diverge a bit, where previously they were in the same direction for about 4 or 5 weeks, but now we are seeing a slight divergence again already. So my advice still stands that try to stay away from trading any kind of STI constituents. Okay, now let's go through my portfolio. Currently for the last week, I have a few actions that I made to my portfolio. I actually take profit on my iFast on Thursday, on 27 October at 3.76. So I sold off 8,000 shares. But as you can see here, I'm still holding 1,005 shares. So this 1,005 share, I just hold it there. I shifted my stop loss to break even, and I just hold it there to see where the market can take me. So I've already taken majority of my profits, and now I am holding a tiny bit of it, maybe 10-20% of my original holding, and I set my stop loss to break even so that if market continues to go up, right, I am still not totally out from the position. So this is one of my trading strategy that I personally use. I tend to leave a small amount of shares behind in case the trend start to go up, and I can still ride the trend with the remaining shares that I'm holding. So you can actually see high P, I also have 4,000 shares remaining, where previously I have taken I think I taken profit quite some time back. So I still have 4,000 shares that is remaining there. Union Gas I am still holding. Aspen, I have entered a second entry, which you all can see in the post also. When I made this post, when I made this particular post on 27, I did not just blindly make the post and with no action to follow. I actually made the trade myself lah. But do note that not every post that I made I will enter, but there are some that I will personally enter myself, mainly because I mean I do not have unlimited fund to enter everything that I am able to spot, but I will pick and choose some of the more counters that I think have more potential lah. So yeah, so just the quick update is that my there's no new shares added, there's no new position added. I just took profit on my iFast, and also yes, I'm still holding on to AEM at currently in minus $1,000 now lah, but it is sort of somewhat still below my stop loss threshold lah. So actually let's quickly take a look at AEM. I just want to show you where my stop loss is. So AEM is currently here. Actually my stop loss is at 3.2, this level here, mainly because I want to go below this support area here, this support area. So when price go further down, it hits, then I will be out of the trade already. But until the price hit my stop loss, I will never ever exit prematurely. That is my number one rule for my own trade setup. I'm not sure for the rest of you how your trade setup strategy is like, but personally for me, every analysis that I give, as long as it doesn't hit my stop loss, I do not exit prematurely. So I'm still holding on to it. Okay, so I've gone through my portfolio current open position. These are my open position. I've gone through my portfolio already. So from September 14 until now, I am currently up 13.54. I'm doing quite well against the STI index, but anyway, STI index quite jialat one. So let's compare the portfolio against S&P 500. So I'm doing quite well against the S&P 500 also, because recently US market saw quite a dip lah. And for Dow Jones also, yes, I'm doing quite well against Dow Jones for this period lah, from the time that I started. Okay, so let's go through some of the counters and some of the companies. So firstly, let's look at STI. So you can see STI for the last week, it has been down. So I mentioned that this is a resistance here in the previous few webinar. You are free to go back and take a look at it again. And now price is heading towards like a lower low already. So I'll be expecting price to go further downwards lah. So that's no argument about it. Maybe along the way, price can recover a bit, but that is not the reason to go and bottom pay and go all in. I believe that the downwards move can continue also. So there isn't really much to say about STI right now, except for the fact that it is happening what I have stated will happen 1 or 2 weeks ago. Even for DBS, let's look at DBS, right? I mentioned that DBS is currently at the resistance right now in previous week, and most likely it will be heading down already. So we can see that it's been heading down. And one thing you want to be very if you want to be more accurate, you can see as the price move down, the volume increase, meaning more sellers are coming in to sell lah. So you will see that price will start to go even further downwards lah. So currently I will stay away from all STI constituent counters. Okay, and this is a quick look at IFAS. So I TP on the 27th, which is around here during this candle. I TP somewhere here. And I'm still holding on to a little bit of the shares. So I mean, for those if you are not aware, the original buy for IFAS probably came around this level like that. So most of you should have quite a bit of profit already lah. And while this candle it is like an engulfing candle and it's red, it doesn't necessarily mean that it's going to go back down. So for those who are not in the counter and you are looking to sort of buy in, right? Maybe you can sort of wait for a retracement towards 3.3, 3.2. If support is found at 3.3 and 3.2, this level, right? I believe it is a good chance to form a base, and then the support is formed here. Buyers will come in and wait for another upward move lah. Probably at the price right now, it is slightly dangerous to chase. Okay, so in the coming week, if you all saw the scanner, if you all saw my scanner, let me just if you all saw my scanner post that I posted yesterday, there isn't really much going on for Singapore. You can see that for Singapore, the scanner only shows SunPower and Yinda. SunPower is Yinda, definitely I won't go for it. If you look at the chart, it's not very nice. SunPower is a bit half. There are better opportunity in US market, so I wouldn't really want to waste my fund to chase SunPower. But if you are not active in the US market and you do want to take a look at SunPower, right? Let me quickly go through SunPower chart. So I will share with you the reason why I'm not keen on SunPower. Although the price looks somewhat bullish. You can see the price has been bullish for the past few weeks lah. So here we have a very good good bullish candle up move also, and here we see another quite a bullish candle up move lah. So the thing is that while it can go further up, if you look at this chart, the moment the resistance here break, right, I believe it can go further upwards. But the thing is that if you look at a higher time scale, let's go to a weekly chart, right? What you can see is we are very, very near the long-term resistance. You can see this long-term resistance here. So it is, the resistance is held here once, twice, thrice, four, then fifth. And now we are going to retest it the sixth time. And most likely if it retests, right, it might come back down again. So you are very near the resistance already. If you did not have some power, like maybe around here, right, this is too early. I will never expect or recommend anyone to chase bottom pick this kind of level. But if you buy in around here, it's quite good. It's quite a good entry. You can actually get this whole part. But if you are only looking to buy like here, right, you are very near the resistance already. So it's not worth the chase lah. It will probably go up and then maybe start going sideways and then start to come back down again. Then what happened is that you will get stuck at the top there. So if those who are keen on some power, my recommendation actually is that you wait it out. You wait it out in the sense that you wait for either price to come back to maybe 0.44 and there is some support coming in, and then you buy. Because if you buy at this level of price, when price start to recover again, right, you do have some profit before it hit the resistance again. Or the second scenario is you wait for the breakout to happen first, wait for the retrace first, don't immediately buy the breakout, wait for the retrace, and then you buy at the retrace support lah. So either way is a better option rather than going in right now. Okay, so that's for the Singapore market. Aside from that, there's nothing much really for the Singapore market. I can look at Yinda lah. Come, let's look at Yinda also. Why I feel is a bit not really nice. Okay, so this kind of chart, right? The moment I see it, I seriously do not want to trade, mainly because there is liquidity issue. There's some liquidity issue, and the reason my scanner throw out this particular chart is that this counter is that there has been some increase in volume happening lately. Because if the counter have too little volume, right, my scanner won't show, mainly because we do not want to get into liquidity issue where you buy already, you cannot sell because no one is willing to buy from you. So because of this sudden increase, right, my scanner thinks that going uptrend, there's suddenly a lot of volume coming in, so my scanner just sort of throw this counter out. But the thing is that if you look at it on a larger time frame, right, it's not really a good safe counter to trade, I would say. Maybe if let's say price went above maybe 10 cents, and you will see a lot of consistent big volume coming in, then maybe we can take a look. But as it is right now, is quite dangerous to play this. So we'll be skipping this for now. Okay, the next one is US counters. So US counter, I have posted quite a few US counter here. You can take a look. Yesterday I posted Garmin, 59 Inc. and Arcadia Healthcare. So these came from my scanner lah, Arcadia Healthcare, 59 Inc. and Garmin. So let's look at some of the charts. Arcadia Healthcare. So you can see for Arcadia Healthcare, right, the reason why I feel this is a good potential is it actually broke out of the resistance and it price closed above the resistance, and I feel that the momentum can continue to go all the way up. So if today the price goes up and goes up even higher and close higher, right, then we can say that price has successfully broken out of this resistance, and this resistance is actually a very long-term resistance, So if price can successfully break out of a long-term resistance, right, the chances of it going higher is a lot better lah. So the details on this chart, you can see it from my Patreon post, so I won't go through it here already. The other one is 59 Inc. So 59 Inc. also very, very nice. You can see that it is a very good uptrend. And what we have here is that we have broken out of the resistance also, and the tail here, the hammer candle here is very nice also, in that it went back down to resistance, but it recovered nicely. Although overall the candle is red, right? I do feel that there are a lot of buyer supports coming in. So if you wish to play this, there are two ways to play this trade. Firstly, you can enter at the market entry, and secondly, you can wait for the retrace back to 142, then you enter at 142, or you could do a half enter at current price, half enter at the when it retraces. But regardless of what you do, right, the stop loss should be at 137. So this level here, the stop loss is at 137. And like as my mantra, right, never exit prematurely unless your stop loss is hit or unless your TP is hit. So if once you are in, right, you should not be exiting unless your stop loss hit or your TP hit. If you do that, right, then if you miss it or what, then that's on you already, because the stop loss is chosen very, very strategically. It's not anyhow put there one. The stop loss is at that specific level for a certain reason. So you do need, if you are following all my trade setup, right, you do need to follow that rule religiously. Okay, so this is for 5-9. Now this is Garmin. Garmin also still quite okay, but the thing is, Garmin, you have a resistance here. And the reason why I feel Garmin is good, because there are increased volume coming in, and it seems that it can break out, but it has not broken out yet. So you wait for it to break out, then you go and buy. That's why you can see in my Garmin post. You can see my Garmin post is that the entry that I give, right, is slightly lower lah. You wait for the retracement to happen. So you don't immediately buy here. You wait for retracement like here. So if price come down, your buy order get executed. So at least if it recovers and it gets stuck at the resistance, right, you can still exit with a bit of profit. But of course, the key here is not to exit at resistance. It's rather you want the breakout. You want the breakout, but here for this case, right, we are sort of entering slightly prematurely lah. Of course, if you do not wish to buy below the resistance, you want to wait for the breakout, is also perfectly viable. Okay, but the thing is that no matter where you buy, right, your stop loss should be at 88.95 as stated in my post. So the reason why I opt not to go for the breakout trade, right, if I wait for the breakout, then the stop loss is very far. The stop loss is very far from my entry ready, and it's not very nice stuff. So that's the reason why I do not go. I do not really want the breakout trade, but I enter first. Then I somewhat sort of hope that a breakout will happen. Okay, so actually that's all the recommendation that I have for the coming week, since the for Singapore side, there's really not much going on. So we see what Singapore side can offer this week, but for the previous week, there's really nothing much going on. And also just to look at some of the other stuff, that other counters that I'm still holding, right? Let's look at Aspen. Aspen, initially the very first call came in somewhere around here, I believe, at this point. So if you didn't enter, you scared to enter, or for whatever reason you did not enter, right? Let me show you. The first Aspen call came in extremely early. Here, 13 October. 13 October. This is the first Aspen call that came in on the 13 October, this candle here. Okay, so it's this candle. So let me change it to bar, so you can see it better. So it's this candle here. So if you did not enter here for some reason, or you were scared, and you, for me, I entered here already. So the second entry here is the entry here is actually my second entry. So I've actually gotten quite a bit of profit from the first entry lah, because for that first entry, my target was like 265, 270 like that. So my target actually hit already before I made that second entry. So for that second entry that you come in, right, The stop loss given was 185. The stop loss given for that entry was 185. Okay, so if you bought in here somewhere around this candle, as per my analysis, as per my trade setup, and right now price is retracing a bit. So if you are losing so much money within this retracement that you are scared, right? It is not even close to the stop loss yet, and you are already panicking. Hey, how come price retrace? Why? What happened? It means one thing. It means that you have overexposed. You bought too much. You bought too much, more than you can handle. So the way you are supposed to use my trade setup is that you look at the stop loss that I give you, and you calculate from the price you enter until the stop loss, right? What is the number of ticks? And you calculate how much you are willing to lose between from your entry price and my stop loss price. And from there, you calculate how much you should buy. You should not blindly go in and buy so many that now price haven't even reached the stop loss yet, you are panicking. So it means that you are risking more than what you can mentally afford to risk. So that is a very, very bad habit, because I do have quite a lot of people coming to me, question, am I still holding, price going down already, how what should I do? So the thing is, if the price is not hitting the stop loss, I will never exit. And if the price does hit the stop loss and I exit, right, it is the loss that I am comfortable with. So if you are uncomfortable right now, the key thing here is nothing to do with the trade setup. It has nothing to do with the stop loss, but rather you should manage how much you enter. What is the position that you enter? Not every trade is 100% winning trade, which is why we have a stop loss. That's the purpose of the stop loss there. So the moment price is the stop loss, you should be exiting with a pre-planned amount that you are comfortable. So that's all the advice that I can give right now. So hopefully we do have a somewhat good recovering from Singapore market this week, although I'm not very optimistic. But the scanner does now cater for both Hong Kong and the US side. So if the Singapore market is slightly inactive, you can now look at the US side already. So I do hope everyone good trading week for this week, and yeah, do look out for yourself lah, because we are in a very uncertain market and we don't want to overexpose and lose more than what we can manage. I mean, if the market condition is quite bad, if you're actually making money in this kind of condition, right, you are a very, very good trader. If you are losing a bit but not a lot, you are maintaining a bit plus minus 1-2%, you're considered very good already. It's normal to lose my money in this market situation lah. So let's try to be let's try your safety is first lah. Profits will automatically come in if you manage your risk. Okay, so have a good week trading ahead. Thank you, everyone.